Afternoon. Hey, Kevin. How are you, sir? There you go, PK. All right, let me go ahead and get this video camera started up. There we go. Let's move it out of the way. I've got listed all over there. All right. Fantastic. So as we do get started, keep in mind that everything we look at is for education. Nothing's meant to be advice or recommendation. If you find something in life, anything, make sure it fits your own personal risk profile and risk tolerance before ever taking on that trade, that setup, or that indicator. All right. So a lot happenings going on this week. We've got Inner Circle coming up on the 26th. Let's see, that would be tonight. 27th is tomorrow, Mastermind Group. 28th is Monster Market Movers. On the 6th, we've got Mastering the Trade. That is for those that are in power option plays. That will automatically get added to your account. It'll just show up as long as you're a member on that day. Trading You coming up on the 11th. It looks like our stuff moved down a little bit here. Lee, we got to take a look at that. If you can see what's happening down on the lower section here. Power option plays, covered call, Explorer, E-mini, Think Tank are all on a regular schedule, right? As is Power Hour and Trading Coaches Playbooks. We don't have any holidays this week. Art of Cash Flow. One more left, guys. Feb 29. That is Thursday, and that'll be at 8 p.m. Trip did a great job in the first two, so make sure you check it out. All right, here is our follow us page. So I can tell you that we've got someone on staff now that's helping us with writing, more writing. We're getting more blog posts done, more videos done, more everything done. Pretty soon you're going to see an explosion on almost every platform, including some that we really don't post on, like LinkedIn. You're going to see an explosion come out of various content on there that we're putting out. So whatever your platform of choice is, I'm excited, super excited for everything that we've got coming out. So you'll be able to see it on just about every platform there is out there. Blog, podcast, YouTube, shorts. Our TikToks are exploding right now. I'm really excited for that. So here's our Trading Boss Manifesto. Make sure you check out this document. You can get it on the homepage. You can get it on tradinglikeaboss.com. You can get it on robertjroy.com and download it from there. But this is basically all the work, effort, time that was spent on this. This is what we feel as a company, what I feel as the CEO is what it means for you to be a trading boss, right? We put a lot of effort, time, and energy into helping to get you to these points right here. No dancing, Erica, on the TikTok stuff. I can promise you that. There's no dancing happening on TikTok, right? I bounce around a lot, but no dancing. And we've got 2 TikTok channels right now. We will be starting a third one. One is a faceless one that is Trading Mindset. We're just starting to really get that one up and ramped up. I was in the office on Thursday with Sean last week. We shot 13 TikTok videos, a couple of responses to customers, to subscribers' questions on there as well. So if you got questions, drop them in. If it's a good question, we'll turn it into a video and we'll answer it for you. All right? Yeah, exactly. Right, Erica, exactly. All right, and here is Mr. Tripp, right? He's actually, I think he's in here with us. I think I saw him in here earlier. So make sure you check it out. He's got one more set up on the 29th at 8 p.m. We'll make sure that there'll be a couple more emails come out with it, of course, this week. We're not going to let you forget. We will inundate you. I saw somebody say that on a video one time that it was their AI. So it was a video that they created, but the AI did it. So he didn't really record it. They just built a script, and the AI, they used the recording of him for the AI. And the guy said in there, listen, just subscribe now so the AI just doesn't harass you until you finally give in and do. So just go ahead and register. That just got dropped in. Lee dropped that link in there for you all. So go ahead and register for that now. Right? All right. I don't want to share that just yet. What trades did y'all do? I want to show you one in particular from me, 2 today, but one from today, one other one. And the other one that I did was an absolute freaking screw up. Talk about blowing it. Wow. Right? We'll see how lucky I did or did not get in that trade, but did I blow it? Big time. How much? $100 gap against me. How about that? That's how much I blew it, right? Wrong trade, wrong time. Never should have did it. We'll share it in a minute. Drop in your trades that y'all did. Let's see what we got here. Erica's bringing an AI assistant to take notes. All right, there you go. John said, Wheel of Fortune, ENVX, Naked Put on Beyond Meat, BYND, Iron Condor on the Rut, cash for $1,100 today. Nice job, John. Really is. Erica said AMD rocked last week after NVIDIA's earnings. Yeah, that was almost a given. NVIDIA came out, bam, just jumping AMD and some of the other AIs like it. It is not a stopping vehicle. You're not slowing this sucker down, okay? You need like a 200 bazooka tank stopping missiles from outer space to shoot at it at one time and maybe slow it down. They are crushing it. AI is doing extremely well, but NVIDIA is just, they're not slowing down. I know Kathy Woods just got a bunch of grief for selling some of the shares off at 500 and change. You know, it's her strategy, it was her method. You can't take that away from her. She does extremely well. That's probably why she doesn't buy stocks that went from 100 to 500 and then back down to 100 and still own them, right? She didn't sell it all. She sold a small amount, but that was her strategy to lock in some of those profits, right? So I'm not saying good, bad, or indifferent, just is, right? Let's see what else we've got here. A lot of trades in here today. Good. No trades off for Erica today. Trader Will, IWM, 12%. So Will, was that on the Hakanashi scalp? Jim said SPY put 14% return. Very nice. Just went short Tesla this morning, PK. PK said, John pounded it again. Good job. Yeah, John does a great job every week with cash flow. If y'all keep track, he's, $1,000 to $2,000 a week, closer to that 1,500. So if you call it 1,500-ish, that's 75 grand a year if you're able to do that, guys, just as an FYI. All right. And Will said, yes, it was the Hakanashi scalp. Excellent. Yep. Erica said, great job, John. Awesome sauce. Yep. For everybody. Good job. Really good job. We've got this trade here from Amelia, which is on MPC, right? And if you look down at the bottom, this is one of the 3 trades that she sends out each and every day. And I do not know if y'all have seen what she started doing. But if you look, and I'm going to have to go back a couple of text messages today already. Let's see. Okay. So at 2:06 p.m. on Friday, TradeWatch alerts message. Y'all can see right there, right? Said TradeWatch alert, simulated trade results. Yesterday's results, VLO entered a simulated long call, exited with 11.3% ROR. IWM entered simulated long call, stopped out with a minus 5.8% ROR. IBM entered a simulated long call, exited with 7.6% ROR. Nucor, NUE, entered a simulated bull call debit spread, exited with 11.1% ROR. So Amelia is stepping up her game, folks. She's not only sending you the candidate, she's saying this is what happened had you followed along. So let's just play straight numbers, straight percentiles, okay? And then you can go from that, right? So actually, let's do it this way. Let's get a calculator. There's got to be one somewhere on here, right? Let's see, where's the calculator? Oh, there it is. Oh, did I put a second one open? Yeah, we don't need to. We just need one. All right. So we got 11.3% was the first one. That was a plus, right? And then she had a 7.6% plus and 11.1% plus, right? And then she took away 5.8%. So for the day, it was 24.8%. Now, let's play the numbers game. If you, we'll make it up. If you put $1,000 in there, that's $242. If you put $10,000 in, that's $2,420. See where I'm going with this? I'm not going to do 100,000 because I ain't putting 100 grand into these 4 trades, right? But look at the numbers. Make your number from there, right? 24% is what she did in a day on what she sends out on TradeWatch alerts. Guys, she's crushing it. She is killing it. Yep, way to go, traders. Jim said, awesome for Amelia. Yeah, Erica, she does great. She really does. Lee just dropped in a link to TradeWatch alerts. So there's a 2-week trial with it, folks, so take advantage of that. Let's see, Q&As. Jennifer, I just saw this. Try to put them in questions in the chat, rather, because I don't see Q&A usually. Wow. Jennifer said I was up by $82,000 last week, down from a few call trades on Friday. So overall now about 60 grand. Woo! Great. Nice. All directional calls and puts last week is what she said. Great, great, great job. Holy mackerel. That is wonderful. Wonderful. Good job. Good job, Jennifer. All right. Let me move this out of the way. Actually, I don't need it. Let's take it out of the way. So let me go over to a mega charts. So Apple. Well, actually, let's go look at S&P for a moment. Okay. Near all-time highs. We were on Friday. Let's unzoom this. So we gapped up slightly today. We ran up a little higher into the 5,100-ish level, not quite, and we pulled back, right? So we're right about where we were. We're down about $3.50 on the S&P. That's kind of like, oh, boring. I don't care. 3 points means nothing on the S&P, right? Lots of good stuff happening on the S&P though right now, right? Such as Amazon getting added to the S&P 500, right? So Apple following suit, what happened? Look where they closed, right at a fib line. They gapped down, they came back and retested the 182.65 and they failed. Right now they're at 181, guys. Great setup today on Apple, right? It was a bearish bias, a true bearish bias. It had a rank of 2 on the start of, or the close of Friday. Today it was really a rank of 1 with the gap down. In other words, we were setting up in a great spot, right? As soon as we retested and failed, there's a great opportunity. Still an open trade. You got a lot of room left down to that 178-ish, 78.5-ish level, right? So just wonderful, right? Wonderful. And then let me do this. Okay, I want to back up a little bit, right? I want to back the train up a little bit. Jim said bearish engulfing candle on Friday on Apple. Yes, exactly. Right. You know what? Since we're here, we'll just go look at it, Jim, and I'll pull up, I'll back it up again after that. So there's the bearish engulfing. So all right, let's make this a teaching moment. If Friday and Thursday, Friday was a bearish engulfing pattern, I'm going to just make it big enough to make it easier to see, right? If Tuesday and Friday, oh, I thought I started this up. Let me start this up so I can get the drawing tools running. So Thursday and Friday, right there, that is a bearish engulfing pattern. Can anybody tell me if this was the close of the day we're looking at right now, what then does that make this? I want to make sure I get the right location. I don't want you seeing the wrong things in there, right? Oh, well, that would not be right. Let's try it one more time. There we go. What is this candle pattern? If you had a bearish engulfing pattern, it should automatically tell you it's bearish, right? The next pattern, a 3 candle pattern. But what is it called? Sorry, I just want to shut the volume on the other computer off. Well, it did gap down, Paul, right? Not quite. It's not a falling 3. It is, I'm going to tell you right now, it is a very much less known candle pattern than many others out there. But from a bearish standpoint, my favorite bearish pattern to trade. It definitely is a continuation, PK. There's no question, right? Oh, not a problem. No one ever needs to apologize for it. Look, why do we do this? You know, again, guys, you talk to people that are in my circles. I just went, last week I was gone. I left on Tuesday, Wednesday all day was a strategy meeting for business growth. And then Wednesday night was dinner and then with the same people, dinner the night before with people, and then flew home on Thursday. And we talk about what each of us do in our businesses. And I tell everybody about this class that we do every Monday called Power Hour. And whenever I explain this to people, they're like, you are crazy. You're doing this and this and this and this and this, and you're giving it away. Yes, but you could sell it. I know, right? The pattern I'm going to share with you right now is in my opinion, the most powerful bearish candlestick pattern there is, right? One candle patterns like a doji, two candle patterns like an engulfing pattern, they're okay. If you use Ryan's logic, which is the only way it works, is if it happens near a resistance or support, a doji has a lot of importance, right? A two candle pattern like an engulfing pattern to me would be a medium or a moderate reliability pattern. Okay, today's pattern made it an extremely high reliability pattern. Again, we're making the assumption that we close. Okay, to truly get that pattern there, because if we run up today and go up $5 higher than yesterday's close, everything is off the books, right? Not an H pattern, not a good guess, Bill. Belt hold, bearish retracement. There you go. There was like H pattern, bearish retracement, continuation. And yes. I mean, you're right on track for all of them, right? This is called a three candles, three outside down. Why outside? Because we gap outside of the previous candle. We gap down on that previous candle, right? Right here to the open. Three outside down. Okay. So three outside down. I think you can guess the bullish pattern, which would then be my favorite, would be a three outside up. Okay. Bullish engulfing pattern with the next candle moving up higher. Okay. Location. On Friday's close, we were already at a Fibonacci level. We were already at a fib line at that point. We gapped down and we retested it and started to fail. Was it at that point truly a three outside down? The answer is no. Is it a setup of a three outside down? Yes. And that is enough for me to say, I'm in. I'm going to take the trade. Why? I go from a true bearish bias. That's number one. My moving averages are spreading apart. I've got a rank of one. When we open this one, and we're right near the fib line. Moving average is close enough. We've got a rank of one. The S&P starts moving down. Why would I not say I like this trade? Right? And then you get that bounce off of that 182.65 level, and then you start to fail, and there's your entry into the trade, right? Into that bearish move down. Here's why I would say a bullish engulfing pattern. Let's see. Let's get some right? Or not a bullish engulfing, sorry. This is why I would say the engulfing pattern is a moderate reliability, right? What makes the three outside down a high reliability is the third day. Today is confirmation. It's confirmation. This is confirming the bearish engulfing pattern that happened Thursday and Friday. It's confirming, yes, bears are really bearish today and running to the downside. And for those that are not familiar, when it comes to the engulfing pattern, right, just the bearish engulfing pattern, you had a hollow white candle here that looked like this. This was Thursday. And then you wind up with a solid bodied candle on Friday that engulfs the body. If the candle was this big, it would not have made a difference. It's still a bearish engulfing pattern. It doesn't matter that it goes over the wicks, but it must engulf the body of the previous day, right? And that's up between, not wick-wise. Doesn't matter what the wicks look like up there. You could have had this, you could have had this. It makes no difference. You need the body to engulf the previous day's body. That's what happened on this setup. Today gave us a three outside down. How many of you have heard that pattern before? Give me a 1 for yes, a 2 for no. It's not soldiers. So you would need three of the same color in the same direction. They also have to open inside of the body. Three black crows or three white soldiers opens inside the body, right? We opened down below here. The first day was a white candle. So none of that represents, okay? Gwen, I don't know what you originally said, but don't worry about that at all. Yeah, right. So Trader Will said, Ryan just covered some of these at the last meetup. Right. So Ryan, once a year, I have Ryan Litchfield come into our inner circle, which is our highest level coaching program. Those of you that truly want to strive to the level of excellence, that's the place to be. Usually starting off with mastermind first. And Ryan comes into Inner Circle once a year and teaches a full day. So we did a Friday, Saturday, 4 hours each day, where Ryan just dug in on candles and patterns and things that he's got in his book. And then he comes back one more time, one weeknight for 2 hours, and he does the follow-up. And he does any follow-up questions that came out of there. And then in the entire month leading up to that, Tripp trains on everything Ryan just taught. He trains on that for the next 4 weeks. So by the time they get there, they've already practiced all of these things that Ryan has done, and they're digging in now to the next steps, the next phases on what Ryan is talking about, okay? With Ryan there, so they can all ask those questions of, we all thought this. Yeah, Will, he'll sign your book, no question. I mean, listen, if I were you, Will, I would ask him what P.O. box I could send the book to, send it to him, get him to sign it, and send it back. You know, just Amazon a new one to him. I'm sure he'd be more than happy to do it. You're welcome. So guys, that was the Apple setup. Loved Apple, right? Love the trade setup on Apple today. Now, let's go back to a normal view here. And I want to go back and take a couple of days off the screen. I want to go back to the 21st. Okay. Now I want to go look at booking. All right. And booking, we closed just below. Actually, let me see what it was. Let me go look. So if it was the 21st, I would have known the 20th, right? So booking, okay, I had booking down here, right? They had earnings coming up. This is on the 20th. Earnings are coming up, okay? It says earnings candidate. So that tells me don't do anything outside of a day trade. So what happens? Well, on the 21st, I wind up doing a swing trade on booking. Forgot all about the earnings. Now we got in on the 21st at 37.18. We 4 contracts. We only do 4 contracts at that level. We did 4 contracts. We got out of our first exit at 37.41 on the same day. So now you're talking about 18, 28, 38, 39, 40, 41, $23 move with a 70 delta. You got a really nice run in there. It's like $2,000 or something. We're up on the first 2 because that's a 2 contract exit. We take that when we take it that way. Okay. Then what happens? Right. So that's on the 21st. All right. The next day we gap up. Man, we are rocking the next day. Holy freaking mackerel. Right. And what happens to the trade? We go ahead and on 222, you can see that candle right there. To the bottom of my screen, you'll see 222.24. Right. You'll also see it right here. We get out of the second exit, which is now 1 contract, because a 4 contract trade is 211 on our exit system. We get out of 1 contract at 38.04. So now we're talking about 37.18. We're at $86 move in our direction for the second contract. I am like, yes, what am I doing? I'm ready to buy a new paper house, a new paper boat, a new paper car. We are crushing it, completely missing the earnings date coming up. Now, I only have 1 contract left. So what happens to booking? Boom! They get crushed from their earnings. My heart is in my throat when I see it happen because I realize that I screwed up and had an open trade on earnings, on the most volatile stock I feel there is in the market out there, which is booking. Excuse me. Which moves over $100 a day on average. And just to bring it all current, we had 1 more day, which is today. We bounced a little bit, but nothing crazy in there along the way. Right? So my stop would have been in place. My stop was somewhere down over here. Right? but I don't get stopped out at 38.57. I get stopped out on the opening price there, which is 36.98. Right? So what does that mean for booking? So there's the one contract, 36.98. We got in at 37.18. So 98.08.18, $20 move. The first one was what? $24. 18 to 41, 18, 28, 38, 9, 40, 41. So the first move was $23. The last move was $20. So they basically offset themselves, right? They wipe each other out. But on the bottom line of this trade, we're up $8,736 on this trade. Again, everything's not funded, right? As it says right on the top of the screen, practice trades, track it, right? What happened? I messed up. I screwed up, right? Royally pissed off at myself, excuse my French, that I did not catch the earnings. And I had it written right on the sheet. And I keep that damn sheet next to me. It's off my desk right now because I want to keep it neat for class, right? But I keep my sheet next to me of what I'm looking for as my trade setups there. I know what open trades I have. I know what has earnings on it. I know what's bullish with a pullback to the 8. I know what's bullish above $300.50. I know what's bearish below this. I know what's a day trade and earning. I've got it all right here. This is my document. This is it. Okay? I had it right on my desk, and I did it anyway and placed the trade as a directional trade. Why? Because I got hung up in the excitement of the move and jumped right on. Yes. Right? What a great trade. Sure. So Paul said, can you please recap how you got to the 87.36 P-Now? Sure. So, Paul, when we look, so on the first exit of booking, we were up 3,858, 35.88 is what we were up the first one. Okay, and that was on the first two contracts. On our next two contracts, we wind up being up $10,296. Again, I am just counting profits, baby. We hit 10K on a profit. I still got to open trade. And I know that the way Pop is designed, the way the setups are designed, many times the last candidate is worth more money than the whole 9 others were worth. Can you imagine how much more it's worth if there's only 3 others, right? So I'm just expecting this to be a $25,000, $30,000 trade here, right? Just, yes, we're going to rock it on this trade. And then from here, we went to one contract at $36.98 and dropped that $10,000 down to $8,736. Okay. The way that it worked, Paul, is, you know, we took an entry and an exit, first exit the same day. The next day, we took our second exit. So we did 4 contracts enter. And if you see down in this yellow bar, Paul, it says, note, aggressive entry, 4X taken, X contracts, 4 contracts taken. Exits are 2 contracts, 1 contract, then 1 contract. So 2, 1, and the last one is 1. The one we're stopped out of is 1. Okay, so that setup right there, right? That the modality of how we got there was we took 2 exits, then 1 exit, then 1 exit. All right, does that answer it there, Paul? Yeah, Erica, I get it. Mistakes happen. Don't be hard on yourself. You want to know what I didn't do? What I really didn't do in the setup is I did not read any of it out loud. Would it have prevented me from doing a swing trade versus a day trade? I don't know. I don't know. But normally, whatever I see on a paper, I read everything out loud. If I'm reading my paper in front of me and I say, because this is how I do it, I'm going to go, all right, booking is a bullish bias rank of 2. We've got, I don't know if you can see it right there, but that E underneath my fingernail, that's earnings for booking. I should have been reading right across and read that out loud, because if you see under that for Chipotle Mexican Grill, this was on the 20th, right? So for Chipotle, it said bullish above $2,600.50 aggressive. I would have read this as bullish bias rank of 1, bullish above $2,650 aggressive. Or I would have read it as bullish neutral bias rank of 1, earnings within the next 21 days. Earnings I wouldn't have read the 21 days. That would have automatically told me day trade. Day trade. Day trade. Day trade. All it is day trade. All right. So by reading it out loud, I would have caught it. Now, is it better to be lucky than to and win than to lose? Yeah, sure it is. I got lucky. That's exactly what it was. I got lucky. And I'm okay with getting lucky once in a while, but I also realize that your luck will run out. And if you keep playing games and keep making mistakes, you are going to get your head handed to you sooner or later. Let's see what I have. This is there. Let's see. Gwen said, it's okay, Rob. Huge learning point for me. This drives the message home. Even when in your mess ups, you're teaching me. Well, I appreciate that. Jennifer said, it happens. It hurts. It happens. I've been checking earnings whisper in the morning for before and the day and after day reporting. Yeah, I get it. I get it. Right. And Will said, that's why we day trade with practice accounts. You got it. So Gwen said you day trade within 3 weeks of earnings, Rob. Is that correct? Yes. So when earnings are 21 days or less away, and I go right to the 21st day. And that's why if you look on my chart, you'll see a blue bar. Now, I didn't update it today, but you'll see this blue bar. Okay. Actually, yeah, it wouldn't be updated for today. So that blue bar, when I did the last power option plays was Thursday. I didn't trade on Friday. So, or very much. I didn't have a whole lot going on Friday. But that blue bar is 21 days away. If I see that earnings are before that bar, like right here, that should tell me, yeah, you don't want to do anything with this. Right? So that's where the 21 days went. So yes, anything after that, I'll still trade it, but it's a day trade. And that's because not all stocks, but many stocks about 3 weeks out, the market maker starts playing with pricing and raising pricing on those options. Some are 2 weeks out, but just to offset and protect myself, I'll go 21 days. We used to go 30. We used to do 30 days, and I moved it to 21 because I'm not seeing a lot of manipulation there, but I am very clear, abundantly clear, that you've got to be really good at pulling the trigger to get out of the trade if you're wrong. You can't be taking on these trades with a 30-day exit and it gaps against you and you're holding on to that trade because you are going to get your head handed to you if that's the case. All right, so be very cautious when it comes to that. Let's see. Now that booking closed about the -618, a new fib. Well, I've got, let's see. I mean, the fib I have, oh, you're talking about right up in here, Will? You know, if we could find a place to draw one, I'd be fine with it. But we popped our head out, we gapped right back down again. So nothing really in there that said, ooh, problem for me. Guys, I just got to make one change here. Give me a sec. I just realized I still had my funded account open from my this morning trades. Let me go change that and put the non-funded open. The SEC doesn't like it. Heavens forbid you see what I was actually looking at today. They get angry, not hangry, angry with us. Let's see where to go. Share. Boom. Okay, there we go. Where did my video go? Oh, all right, there we go. We got it. All good. All good. Let me go get the chat box back again. Tom said, just confirming no trading in 30 days. Wait, help me out there, Tom. I'm missing what you mean there. Barry said, does the 21-day rule hold for after earnings are posted too? No. Stocks are often wild a few days after earnings. Can after earnings just be a few days or still a 21-day rule? 21-day rule is only the prior. What actually tends to happen, Barry, one of my favorite ways of trading earnings is after the announcement, what happened? The market maker's been jacking premiums up for 1, 2, 3 weeks. So an option that should be worth $7 is now trading at maybe 8 or 9 or 10, right? Right at the earnings time. The announcement comes out, the stock does exactly what it's supposed to, and that $10 option drops back down to 6 or 7 or 5 or whatever the number is. Well, let's say the fair value really was 7. It doesn't drop to 7, it usually drops to 6 or 5. Right? Why? Because the market maker is slapping anybody, if there's enough open interest, that has that option. They're literally slapping their hands for holding it over earnings. And they're like, you got no choice. You want out? I'm the guy. I am the guy. You got to pay the piper to get out. So that next day, I love to take advantage of options when I see they're deeply undervalued like that. And then it's not all of them. Some of them just go right back to fair value. But I love taking advantage of that. So I trade them the day after when I trade earnings. Okay, so Tom said, do we trade a stock 30 days from earnings? So when I do covered calls, Tom, when I'm buying the stock, I'm looking for, that same 21 days, right? I won't do a covered call with less than 21 days. Again, you could go to 30. I'm fine with that. But sorry guys, hold on. My dog is sick today. And I thought I just heard him outside of my office door. Yeah, so I should have said this at the very beginning. My dog had a seizure yesterday. It's the first one he's ever had. Absolutely freaked us out. Everybody in tears when they saw it happening. My daughter, who's a nurse, was a vet tech, was here. And she took over right away and showed us exactly what to do. And so today is very much a watchful eye. They don't leave the house for me. So any prayers for Sparky would be very much appreciated. So it's not that will I not trade them? I don't normally buy stocks with less than 30 days until earnings, just for the sake of the manipulation in price. Now, if there's something I think is going to happen and I'm planning on holding over earnings or I'm okay with buying a put option to at least offset my risk right before the announcement of earnings comes out, within that last week, then I'm okay with it. But usually I will wait, like Covered Call Explorer, we will wait until after the earnings have passed before putting them on our list. His name is Sparky, Brenda. Thank you. And thank you, Erica. Jennifer, thank you, thank you, thank you. All right. Do I think it's too late to buy shares of NVIDIA? Someone's asking me. No, I mean, I don't know. They went from 400 to 800. So they doubled in price. Is it too late? I don't think NVIDIA is done. I just don't know if today is the day. Okay. My opinion says today is not the day. I want to see a pullback. And it might not happen over the very near future. You may have to wait weeks, months for a pullback. So, but I can't jump in with the anticipation of, and that's the wrong word, with the guess of, yeah, it's going up. I just can't do it. Right? Now, have there been some serious money made? Yeah, $675 up to $800. Yeah, serious money was made on that move. I mean, it's just 3 days, right? 2 days. People were crushing, killing it. Right? But listen, you always get another chance. Sorry, Erica, right? Just like Roku. We always get another chance. Right? Roku was $100 stock. And then it just said, yeah, we don't know what the hell we were thinking running all the way up there. Let's just start working our way down, going sideways, and then say, ooh, earnings, bad. Digest the earnings, really bad. Just dang, right? All over the place. Poor Roku, right, Erica? Poor Roku. Listen, it is what it is. You can't, that was a conversation this week it's great meeting with other business owners, all different businesses. No one else in that group that I'm with, and there are 40 of us, no one else in that group has a business related to stock market unless they're a financial advisor. And I was talking with the financial advisor there, and her and I are actually going to have some conversations going forward. But she said, Rob, I've never heard of a model like yours of what you're doing, because we don't only work with y'all here. You're going to see pretty soon that we're partnering up with a brokerage firm that we're going to be doing some stuff with them as well, right? And the goal to teach the brokerage firm. Why? Because how does a broker make money? You buy your options, your shares, you pay for commissions, right? They get paid on commission. The longer you trade, right, successfully, the more money they make. Well, if we can help you trade better, right? If we're able to aid it all in your success in your trading, it just makes it that much better for their clients, for their customers, right? Roku concerned about Walmart, Vizio TV. Yeah, Jennifer, whatever it is, this is going to be across the board with any company, right? So ChatGPT, right? Major factor out there right now. Everybody is ChatGPT, just wild conversation, right? ChatGPT is awesome. I use it every day. Every single day. In our company, we probably spend 30 hours a day in ChatGPT at least, as a company, at least, right? But there are other programs out there that have better reasons or better uses than ChatGPT does, right? That do better, like this new program, Gemini. I've seen reviews on it from people that I trust very much in the industry, in the AI industry, and they're talking this thing up like crazy, right? There is Claude, which does an amazing job for large data sets where ChatGPT gets lost. They lose it. So that's AI, right, is the tickle symbol, right? Right? Which is C3.ai. Okay. So, great AI company and all that, a lot of backing into Chat GPT and so forth. But there are other companies out there that are going to wind up coming ahead of Chat GPT. I would be shocked if GPT stayed there. AOL, right? America Offline. Y'all remember that? They were it in the beginning for internet, right? You don't even hear about it. My mom still has an email address and she gets blasted with these garbage emails every day, to the point I finally got her to stop using it because she got a virus. Just crazy how bad that platform to me is. Okay, doesn't mean you don't like it. Not that I'm really a fan of Gmail, because I believe Google reads everything you write. So it just, I get pop-ups, and I don't use a Google Calendar. I don't believe in it. I have Outlook that I use. But I get a pop-up or a message that says, oh, you have a trip to Chicago coming up in 13 days. I do? How do you know? Google read the email that came from Delta that said, here's your flight. So it knows. Or I get a message that says, you have a bill due, because I get something from the electric company that says your bill is due in 7 days or 8 days or whatever the number is, right? And Google will say your electric bill is due. So they're reading your emails, right? They're reading what you do. And oppressing life. Well, we'll leave it at that. Brendan said, I still use AOL. Yeah, listen, you use what you use. That's okay, right? I'm not trying to tell anybody not to. All right. So there was my, oh my God, did I get lucky or what trade? Can't get away with a lot of those. You won't get away with a lot of those. Sooner or later, you're going to get your head cut off, right? So this could have easily been a $20,000 or $30,000 hit on this trade. So you got to make sure you're following the rules. And just because you, the teacher, the coach, me, that doesn't mean I get to break them and forget to read them. Forget to read the trade out loud, which again, more than likely would have fixed that from happening. Yeah, Trader Will says, I'm a tech guy and I'm not an AOL fan. I'll put it that way, Will. Yeah, it is not I don't think it's a good platform. I think there's a lot of risks in there. I think it's from the way it's written, I think there's still a lot of open concerns of hacking and so forth. And mom got hacked and they got into one of her accounts and they got money out of her. And that's what it finally took, that she said, all right, I'll stop using it. And she doesn't like Gmail because she's used to AOL. Mom's 83, will be 83 in a few weeks. She will be 83. She doesn't like Gmail because she's used to AOL. She's used it for 20 years, right? But now she's realizing that, she can't call me anymore and say, I had a problem with AOL. What do I do? Because I told her I won't help her. You can go back to whoever you used to get rid of the virus for you that charged you $400. I'll be happy to let them fix it for you again. But I ain't doing an AOL issue. So don't ask. Yeah, Will said, if booking went sideways for 2 days, you would have had 4 contracts. Yeah, had it not gone anywhere, and then as it gapped down, I would have been in trouble. Exactly, Will. Let's see, Jennifer. Yeah, so Jennifer said, I need to change my email. It's such a pain to go to all the connections and change them. I know. And it's called a moat. M-O-A-T is the way it's looked at in business, right? Is it a it makes it a hassle to get across, right? So that moat in changing your email address is like the moat of getting a new cell phone provider. I've got AT&T. I don't like them. I want to switch to somebody else. I had Sprint for years and kept saying, I hate him. I hate him. I hate him. I want to change. And we never did. Every 2 years, the new contract comes up. We didn't change. Why? It was too much of a hassle. They changed over to T-Mobile, supposedly a better platform. They messed us up at the end of Sprint with the conversion into T-Mobile. We kept them anyway, and then they stuck it to us yet again with billing this year and so forth, right? They changed the rules after we signed the contract and said, too bad, pay more money or give us a bank account to withdraw the money from instead of a credit card, which I refuse to do. I don't let anybody just go in and take money out of my account. Here, we'll just do a withdrawal. No, you won't. I'll do an automatic payment to you, not the other way around. Yeah, so I get the part, Jennifer, of having to make the change, right? It is what it is, but yeah, well, so we got lucky. It popped at the end of the day. We did. Suzanne said, I pay for promotion for, I'm sorry, Pronto Mail for the important, more private things. Interesting. Okay. We pay for Outlook. It's still Microsoft. I don't trust Bill Gates. I don't like Bill Gates. I don't believe the things that Bill Gates says. I think Bill Gates is, well, I'm not going to say it. So I'm not a Bill Gates fan either. I don't know Pronto Mail. I've never used it, but that's kind of why we don't use a Gmail setup. We use Outlook. I went through months of extensive research we did as a company to figure out a way not to have to give up our Outlook because of the way Microsoft handled our, it's called name service, something we had to do with our website. And we did it. We found out, right? Whether you like Gates or not, guys, listen, that's you and there's nothing wrong with it, right? Bill Gates did an amazing job, came up with an amazing product, right? I just think money changes people, right? Let me rephrase that. I think certain levels of money changes people, right? You're making 100 grand a year, you're making 200 grand a year. Yeah, that'll change you a little bit, but it ain't changing you. You're a college student and all of a sudden you're worth billions, and then you're the richest man in the world at some point. Yeah, that may have some effect on you. They're a Swiss company. It's good to know, Suzanne. It's good to know. So Pronto Mail is what Suzanne said, guys, if you're interested. And then Gwen said Hush Mail is private and secured. Okay. Yeah. Oh, Erica, I gotcha. Money makes you more of who you are. That's exactly right, Paula. I say it all the time. If you give $1 million to someone that is a good person, they're going to do good things with it. Give $1 million to someone that's a bad person, they're going to do bad things with it. I get it, you know? Okay. So let me go back into the S&P 500. Let's talk SPX. So guys, we were going to talk about trading the S&P 500 with all-time highs. I think we're just going to push that to next week since we spent all that time on the engulfing pattern. So let me ask you, was that engulfing pattern worth our time? And what I mean by that is if I see something like that in the future, is it okay to stop, even though it might change where we were supposed to be going, and train on that right then and there because it's happening now? Or would you prefer me to just kind of stick to the schedule? Give me a 1 if it's okay to make that change and teach what's happening now, or give me a 2 if you'd rather I just stick to the schedule. And it's okay to have an opinion. I'm not going to say, really? You know, Bill said 2. I could care less, right? Do it more often. Okay, love it. Learning moment. To me, teaching moment. It's exactly it. Patterns are very important, Will said. Yep. Let's see. Teach something that is happening now. Great idea. Okay, good. Good. Hey, Chip. Chip, you're going to be here in a couple of weeks, right? We're all set for you here in New York, right? Yep, I'm excited. Chip's coming in for a one-on-one. What did I say about the engulfing pattern? I just said, Brenda, that if I see something like that, is it okay for me to stop and teach on it instead of worrying that, oh, this was the topic we were going to teach on today. Let's go back and do that. We could do this one next week. I'm not going to blow it off because we spend 10 minutes as a group. There are 3 of us, 4 of us that spend 10 minutes as a group picking what the topic's going to be for that week. So, yeah, you're going to have to go back and watch it, Brenda. It was in the very beginning. Mix of both, I guess. Tim said, I rely upon topic in the email so I know what to expect, and that's why we do it. And choose to attend when I have a conflict. I'm all with you. Absolutely. And normally we do, but when this popped up the way it did, it was perfect. 3 weeks. Yep. Yeah. So we got to make sure you got the right address and the hotels in the area, Chip, and all that good stuff. So, all right, let's talk S&P 500, guys. So I'm going to get rid of this orange bar. That's just a bar for pop purposes, so we don't really need to have that on there. I'm going to go to an F5. Actually, let's bring it in. I'm going to take down the symbol grid. So I don't really need that. Okay, that's as much as I can go in. So ever since where this fib started, well, actually back out a little bit. We had a nice run down into where the start of that fib was. And we started climbing back up above these bullish trend lines there, right? The bullish directional trend lines. We started climbing back above and had a nice pullback off of the 0 line, good bounce. And then what happened? We started getting into breaking the all-time highs, right? So we broke above that 0 line. We get to new all-time highs. We pull back, right? We new all-time highs. We pull back, new all-time highs, which is where we were on Friday. And now today we pull back. And it's not just Friday. Thursday was great announcements, right? The move Friday and then the pullback today on Monday, right? You're going to see more and more of this happening. But here's really, to me, the importance is this. All right. I say it all the time, and I can't drive this home enough. There's a firework called a Roman candle. It's a round tube about, I don't know, 16 inches long, and it shoots balls of fire. And they tell you that you should never hold it in front of you because it could backfire at you. So you have to hold it like this, where the bottom is not, your hand is on the bottom, like this, and you shake it on the side of you, and it shoots these balls of fire in the air. Well, those balls of fire go straight up, and whatever the solid matter underneath the fire, when it's done, flames out, falls straight down, right? And any stock that goes straight up normally falls straight down. We don't want that, right? So realistically, what I want to see is this. I love that we move up, we pull back, and we bounce. We move up, we pull back, and we bounce, right? What a great entry right there. We move up, we pull back, and we bounce. What a great entry right there. We move up, we pull back, and we gap. Okay, hard to take that entry. I can't. It's too far of a move, right? So now what? Moving average is going to keep climbing, pull back, bounce, take the entry, right? That's what I'm looking for. That stair-step pattern. That's what that is called, the stair-step pattern. That stair-step pattern is amazing for finding a good entry point. Does that mean that you couldn't get into the S&P today or a trade today if this is the pattern? No, it doesn't mean that, right? But if I am trying to do everything I can to put the odds in my favor, right, then allowing the S&P 500 to have the right setup and bounce gives me the best chance of being right. Add that, combine that with only trade in the direction of the S&P 500, and I would never say you guaranteed your success, but you drastically reduced your risk in that setup by doing so. And if you go back and you test, okay, if I waited until here and I go back and I found this date, which is January 31st. It's okay. I see on the 31st, and then here on the 1st, so the 31st we pull back, the 1st we bounce, the 2nd, the 2nd would have been a potential entry. Now go back and look at every stock that you would have traded and see where they were on that day and how they reacted there. And you will find many of them, not all, many of them are going to have a good move, right? If that's the case, and you can see that you go back and you do this on 100 different days, 100 pullback times, right? And you measure 20, 30, 50 stocks each time you did it for each day, right? And you measure a bunch of stocks, and you see out of the 20 stocks that you measure, like we have in POP, that of the ones that were setting up, there were 5 setting up out of 20, just makes math real easy. 5 of them were setting up, so 25% were setting up. Of those 5 that were setting up, 2 of them actually worked. Well, that means 40% of my possible 5 candidates, 2 of 5 worked, right? And if you can go back and backtrack that and build that confidence there, then yes, to me, very important then that you now are able to trust the pattern, the setup, the structure, the system that you've put together, right? And that's where I love these pullbacks. Same thing when it comes to the stock, not just the S&P, right? Not just the S&P. I am a big fan, a big believer that everybody, and this is just my mentality, everybody should own SPY in their retirement accounts. Everybody should own it. Possibly Qs too. Your risk is really what's going to determine that. You work with your broker, right? But I don't really think there's a scenario that someone could say, no, SPY doesn't fit my risk profile, unless you're crazy, nutty, ridiculously, risk hound. But yeah, I want it all. Give me all the risk you can get. Unless that's you, probably not going to find someone that says the SPY just can't move enough for me. Yeah, SPY moves plenty for me every day. right? To the point that there are trade setups 2 to 3 times a week without a doubt, just on pivot points alone, in there. Gwen said, I've been using fibs. I sent question to support. I've watched many of the fib videos. Which trainings shows me how to create those higher fibs on the right? All right, so Gwen, you got to help me out what you mean by the high. Oh, I know what you mean. I think I got you. You're talking about what comes up above the zero line in there? Is that the ones you're referring to, Gwen? Gwen? All right, so tell me what you mean. Sandy, the scrunch key, the F11 key brings the chart down, the F12 brings it out. And then if you activate the chart by clicking on it and hit escape twice, it'll put it right back to where it was originally. So guys, here's what I will say. Hey, Lee, do me a favor. Drop a link into Monster Market Movers, please. We have anything for it up here today? No, we don't. Okay. So let's see. Monster Market Movers. Here's what I will tell you. And these are about to go away. Inside of Monster Market Movers, and you can register to Monster Market Movers if it's your first time, and it's the first time in 6 months. You can register at $49. If you have already registered at that last month and you do it again, it will automatically charge you the full price of the $199 for the class. So, and if you're unsure, you can always send a message to the office and they can tell you. But Fibonacci training series, 1, 2, 3, 4, 5, 6, 7 months of training that we did inside of Monster Market Movers on fibs, right? And these are all the setups, right? We did proper drawing techniques was one. So that was the only one that's not a setup. And then we had 1, 2, 3, 4, 5, 6 trade setups in there that we had. You have access to all of those for the 30 days of Monster Market Movers, right? So if you have an interest in that, by all means, you can easily grab that and check that out. All right, so Gwen said the numbers to the right side, so across from the -136, which is 48.87. Okay, so are you talking about how the actual number gets there, Gwen? Or about the level? Because I want to see under the text, I want to see the ratios and the prices. So when you right click on a fib line, if you're using Omega charts, you edit it. Right now, you could have also just left clicked on the line without having to click edit. It'll just open that edit box up, just the way I'm used to doing it. Make sure under show text, you have ratios and prices clicked. I keep my prices on the right, look straight across, my ratios on the left. You can do them both on the same side. You can do both of them on the left if you wanted to. See, they just moved. I don't like it like that. All right. So I want my ratios on the right because I don't care about the price level. I care about what ratio I'm looking at. No, my bad. Right? You do either way you want. Right? Whatever, this is how I normally have it. Whatever way works best for you. All right. Just make sure, darn. Once you do it, Gwen, make sure you click save as default, because if not, it will only change it on this one. And it won't change what you, I don't know if it changed what you had. I think it leaves everything else old you had alone. It will, you have to change everything going forward. I've never changed these. These have been like this since I started. But make sure you click save as default. Right. Good. Okay. Perfect. Perfect. But guys, if you're really interested in the fib stuff, for $49, you got 30 days of fib stuff that you could be looking at there. All right. If that really has, if you have an interest in that, for 49 bucks. So let me see if there's any last minute questions there. All right. So where do we see the S&P 500 going? Okay. Wow. Sorry about that. So where do I see the SP 500 going? 50-57 on the downside. That 5100 is going to be resistance. You can see that for 3 days, it's not really been able to make it through. If we do break through on the upside, 5138 is the upside level. Yeah. So Erica said, I thought the market would have pulled back by now, the S&P 500. Yeah, me too. But, good news out there. We'll see what happens with the pending government shutdown, right? What do we have? 2 weeks left on that, I think now. We'll see if they actually can get that resolved. I really wish someone would pass a law that says if politicians lie, they go to jail for it, for any lie. Right? Because right now, who's saying that this side is adding stuff in, the other side saying this one doesn't want to cooperate. This one is the reason the border won't close it. Listen, if you're going to lie, then you should have to take full responsibility for it. Because I tell you what, if a cop asks me a question and I lie, he's going to arrest me. Right? So why am I responsible, but a politician is not? Okay. So with all this stuff happening right now with the potential pending shutdown, that could have some effect. And then we've got one coming up. I think April is like the big one where there's supposed to be a reduction of spending. I think that was the one of the ways that were used to agree to a bill was we were going to start to see a cut back of 1% of spending. We'll see what happens when that fight comes, because it's going to be a fight. That was agreed upon for that day only. Yeah. After that day, the other side has already devised a method of how to fight against it, right? But we've got to see what happens when that transpires and see what takes place there. Yeah, good. Exactly, PK. All right, folks, listen, we're a little bit beyond 1 o'clock. Appreciate y'all being here. Listen, go over to make life very easy. Go over to Trading Like a Boss. .com. You'll find the links to Trip right on there and the likes, right? You can also get back to, you should be able to get back. Yeah, visit our sister sites. There we go. To Wealth Builders and then robertjroy.com as well. So, yeah, I appreciate that about Sparky. Thank you, guys. Let's see. One last question here. Jim said, do you teach that you do not teach this, but thought this was interesting with the drawing of the fibs? I'm going to have to look at it, Jim. I don't know for right now, but I appreciate it. I'll check it out. Exactly. So excellent. Hey, everyone, have a great day. God bless. And I will see you all at our next update. All right. Bye for now. I'll leave the room open a few minutes. You can grab the links that Lee dropped in for you. Bye for now.